Got it? Okay. So all of you must understand, when we talk about IS 21, you can get two types of exam question. You could be dealing with individual company stage, or you could be dealing with group stage. Individual company is maybe parent deal with somebody else, some other foreign company, subsidiary deal with some other foreign company. It's a one-to-one basis. But group meaning parent is in one country, has a different functional currency, subsidiary has a different functional currency. So we have to translate the entire financial statements of the subsidiary before we do the consolidation, correct? So the problem starts with this word, functional currency. Let's start with the next page first. I do a bit of theory, we do some case study, and then we come to the calculation part. Have you come to this page? Identifying the functional currency? Okay, first thing. Is functional currency and presentation currency the same? Tell me. Okay, wait. Put this here, dear. Please move what I'm doing. I should have done that earlier. Oh, yeah. Okay. Okay. Identifying the functional currency. What is the main issue that you need to know in the exam? This is not a choice. This is subject to primary, secondary, and additional factors. So obviously, functional currency is not a choice, but presentation currency is a choice. Come down and write. Currency, any currency in which the company prepares financial statement. This is a choice given to the company. Got it? Hello? So, where do you think majority exam questions will be? Majority exam questions will of course be asking you to determine the functional currency. Come. So, always you start with this word. It is the currency of the primary economic environment in which the entity operates. Now observe what I'm doing. Put PE in blue. So Miss, what is PEE? Simple. It is, come on, the environment or the country in which the company generates and expends cash. Generates, we always focus on revenue. Got it? Hello? Expending cash could be for purchases and all types of expenses. But the problem is, we always start off with what factor, dear? Primary. But sometimes primary factors are judgmental because maybe revenue 50% is local, 50% overseas. When it is not conclusive, when primary factors are not conclusive, that's when we look at secondary. Not conclusive, we look at additional. Clear? Okay, now tell me, quickly reply there. Primary factors are based on SOP. How we generate revenue can be generated, come on, in the form of sales And we also have to look at the regulatory authority that fixes the selling price. Once again, I repeat, you always start with what word? The currency in which we generate revenue, the currency in which we raise sale of goods, and the currency of the regulatory authority that determines the selling price. Got it? Once again, see, the word currency is common for everything. Got it? Hello? The currency in which we, and if P1 and, you understand what is P1? Huh? Primary factor 1, primary factor 2. So means we raise revenue in dollar, but expending cash little bit in dollar, little bit in euros. That means, what must you say? Because it is a, come on, mixed currency, you must take this. It's not. So we have to conduct an assessment of the secondary factors. Is it clear? Come here. Means, what are secondary factors? Secondary factors, as I tell my student, primary is based on SOPL, revenue and expense. Secondary is based on SOCF. That is, again, you see this word every time I keep telling it is the in which company raises its finance. Did it raise it locally or from foreign currency? And the currency in which the company retains operating cash receipts. Got it? Hello? Again, what's the problem? If the above are, that's the problem, not conclusive. Then you must write, we need to make an, but if you already say a primary and secondary is already conclusive lah, no need to do additional lah, then you can assume that functional currency and presentation currency will be the same. But means not conclusive, then we have to go to additional factors. So additional factors is to determine the, is the company a or independent. But frankly, dear, nowadays, more than the use of the word dependent, and the correct word we use is it an, or is it an autonomous? This is the wordings we use currently. If it is an extension, then you can already conclude parent and subsidiary will have the, but if it is autonomous, that means parent got its own PEE, subsidiary got its own PEE. Both will have different functional currency. Correct? So, volume of transaction between parent and subsidiary. If it is, everything is between who and who only, parent and subsidiary, then it must be dependent lah. Correct? But if transaction between parent and subsidiary is low, it must be a what subsidiary? You all are not answering. You're sitting and staring at the board. Can I have some reaction? What is it? If every transaction is between parent and what type of subsidiary is it? Come again? Extension means what? What is the conclusion? That is what I want you to tell. Not just tell me dependent, independent. No use. You must write your conclusion. That means if it is dependent, both will have the same functional currency. Got it? And here, cash flow impact. Dear, I want you all to know A1, A2, A3, P1, P2, S1 and S2. If cash flow has a direct impact, then again they are dependent. If no direct impact, then they are independent. Got it?